All right, hello and good morning, everyone. Welcome to another edition of Trading Bitcoin with your host, Tone Vays. We're doing another one of these editions where I am joined by a fellow trader, first time on my channel. So let's go ahead and welcome Sammy, also known as ForFlies, to the show. How you doing today, man?
Hey, doing very good, thanks. Actually, the second time. First time was at a party in Dubai. Not
Oh
sure if
yeah, I tried Party in Dubai. Oh yeah, Party in Dubai. And I'm not
yeah.
sure if you joined one of those epic streams of 50 people at the same time that I do on special events. You're right, but this is the first time we actually get to talk charts, talk trading, and you got your own thumbnail, alongside. And I'm like, oh damn, I have one with Willy Woo and cars. We may have to switch the Willy Woo one. You are a bit of a car connoisseur. I know I've been in a few of your cars. They're both pretty nice. Actually, they're both in the back of my picture of this thumbnail. How you doing, man? So let's get a little bit of your background. I'm gonna screen share your Telegram handle and also your YouTube channel. Tell us a little bit about yourself and how you started and how you got into trading.
Yeah, cool. So, first of all, yeah, you were in the cars in Dubai. That was very fun. And I started out trading 4 years ago, 2017. I still remember my first trade was Ethereum, buying it at 300, rode it up to $400, sold it at 180. That was fun. And then I just basically got sucked into the market, made a lot of mistakes, got lucky towards the end, and then lost most of it in 2018. And that's kind of when I became serious. Went to your workshop in Amsterdam, which was very, very interesting. And from there, yeah, I just kept studying books, learning from mistakes. I had my own sort of, I don't want to call them mentors because they might not like that title, but people who taught me a lot about trading as well. And yeah, just kind of took it from there. And that's my journey in trading condensed into about 30 seconds.
All right, I'm gonna have a few follow-ups on that. And when did you start your YouTube channel, and when did this channel migrate to be more trading focused?
So this channel, if you go on the about page, this channel's been around since like 2011, and that means like I'm 19 now. That means it's been running for 9 years as of like 3 days ago. So
10 years.
so that's a it's a pretty it's a
You've had
pretty
you've had this since you were you've had this channel since you were about 9 or 10 years old.
yes, exactly, yeah. And it started off well when I was younger. I was very stupid. I just wanted to be famous. Obviously that's not smart for young kids, but it's quite normal these days. And so I wanted to, I don't know, I wanted to be a rapper, a video game YouTuber, you name it. I tried it. I used to make tech videos as well. You can still actually see those on this channel. And but I'd always been interested in trading. It's just I never understood it being so young. So as soon as I realized that, like in 2017, the barrier for entry wasn't actually that high. And I had known what Bitcoin was many years before anyway, just because I was like an online nerd. And as soon as I realized I could get in, that's where all of my focus shifted to trading because it was much more fun than, I mean, making money in real life and enjoying that in real life is obviously much more fun than, any joy that video games can bring in my experience.
All right. So you, like you said, you started trading in around 2017, which would have made you around 16 years old when you started trading. And let me come off screen share for a few more minutes. And it took you a few years to figure it out before you started trading profitably.
Yeah, so I mean, I had my bursts of getting lucky. Obviously, anybody would in 2017. Where it really kind of changed for me was actually around Q2 2018. This was after the crash down from 20K to 6, and then we kind of start, we're going from 6K up to 11K and so on. That's where I realized I'm not a good trader. And actually it was luck in 2017, and you realize that because all the success suddenly stops and now you're losing money, but other people are still making money, and you're seeing how actually you could have pulled those results if you just had better decision making skills and things like that. So that's where the veil was kind of lifted up from my head, and I realized, right, I'm not good at this. But I wanted to be, because I wanted to drop out of school, which I ended up doing. So the way that, yeah, like the first year was pretty bad in hindsight. The way I was able to improve as a trader, it came down to one realization, which was, see, as a trader, we're inherently looking for shortcuts to make wealth, right? Like, if you want to go from nothing to something, you can work a job, you can start up a tech company and sell it, whatever. Trading is a fast track way to get there. So we're always looking for shortcuts as traders. We're looking for shortcuts to wealth in this case. But inside of trading, I realized that there is no shortcut. You've got to do it correctly. You've got to do it safely. You have to exercise the risk management, and there's no space for thinking this time I can be a little bit more risky or whatever. And essentially, yeah, when I stopped looking for shortcuts, it also happened to be a very, very juicy time in the market, because we were ranging from 6K up to like 10 and so on. It was quite a predictable descending triangle that we were in. That's where I started trading quite well and learned essentially all the things that most traders know they should be doing already. I knew it logically, but I learned it emotionally around Q2 2018. And that was where the big changes happened. So studying everything the books would have said you should be doing is what I started doing at that time.
Yeah, it takes a while. There's definitely a huge learning curve, especially, well, either way, right? If a person gets into trading and is not doing well from the start, they think that, it's impossible and they can't do it and they quit. And most people that start off very, very hot learn a valuable lesson in the near future that, no, a lot of it was actually kind of luck. And being able to survive your first couple of years it's a struggle. And then after that, you're able to make some profitable trades. And then you decided to start your YouTube channel, documenting all that. And you do have your own private VIP group that people do pay for. And already in my live chat, there is a lot of controversy on it. So I guess let's talk about the charts a little bit, and then we will get to that at the end, guys. I know a lot of people are upset every time I bring anyone onto the channel, and but like I said, you guys know my view. I don't offer a follow the leader trading group, but a lot of people always ask me for it because it's a lot of responsibility. And there's a lot of criticism that comes with that, because you can't make everybody happy. Maybe one day I'll open a hedge fund and just manage money. But for now, I like this channel the way it is. But we'll talk to Sammy about that and the definition of scammers, because I know you hate a lot of the same scammers that I do, Sammy. And you and I have discussed that many, many times while I was in Dubai. All right. Without further wasting any more time, let's get to the charts. We're going to run this show the way I usually do it with guests. I'm going to take a short amount of time, maybe 5 or 10 minutes, and just go through my views of the charts. And then I'll let Sammy do screen share, and we'll get his views on the charts with me asking questions along the way, because I have some idea of his trading style and what he prefers, and we will find all that out. Okay, so let's skip the monthly chart for a minute. Whoa, looks like we're dropping early this morning. I did not even see that. When last time I looked at the charts was a few hours ago, and the price was still hanging around 38. So we must have just taken a hit. We were on an MRI buy. I did not really like this MRI buy all that much based on how the chart pattern worked out, but it's an MRI buy nonetheless. I have, however, been saying for weeks now that this is, on a weekly scale, this is just a hold position. It's a cash position. This is neither a bearish chart nor a bullish chart to me. We're stuck between two moving averages, and I can make the case in either direction. From a daily perspective, we did break counter statistical direction of the descending triangle. I have left that descending triangle here. I was really hoping to get a clean MRI sell right in the vicinity of the depth cross, which to me is one of the best shorting opportunities on a top as opposed to shorting on a breakdown. There's two ways to enter a trade for me. You could either try to time the tops and the bottoms, or you could play the less risky game of selling the breakdown and buying the breakout. This was going to be one of those short the top situations if the top was to come either yesterday or today. Unfortunately, we turned a few days early. The MRI did help identify that turn. There was a warning arrow on the 16th of June and the full-blown MRI sell yesterday. I continue to warn people not to go long in this market from a daily or weekly perspective. Maybe on the day of the MRI weekly buy, there was a long trade, but it was going to be short-lived to be reevaluated at the depth cross. And now we are going down. And finally, I will glance at the short-term chart. And here's what I mean about the breakdown. As I pointed out in yesterday's video, here is an example of where you could try and short the top, but the safer trade is to short the breakdown or exit your long trade at the breakdown. And right now you saw it again. Here's consolidation. There's your breakdown on a red star candle, which is part of the MRI, telling you that there is a possibility of a trade here. I know there were a few red stars earlier in this consolidation, and those trades would not have immediately been profitable, but I wouldn't exactly say these trades were bad because the price never went above the prior swing highs, which is where I set my stop losses. And now we are breaking down. So as long as we're breaking down, I would remain cautious and on a 1 hour chart short in this market. Quick peek at the 4 hour chart. The breakdown takes place, well, I guess somewhere here as well. And waiting for the MRI. We're just getting started, though you could kind of consider this that spirit of the MRI where this could have been a 5 candle. That means the 4 hour chart could be bottoming sometime soon. I'm going to go ahead and leave it here. I'm going to allow Sammy to do his screen share. And but before you start talking about charts, Sammy, talk about your trading style. Are you a short-term trader? Are you a long-term trader? Do you trade with a lot of leverage? What assets do you trade? So talk about your trading style, and then give us some analysis of what you see in the market based on that style in those timeframes.
Sure, yeah. So I'm definitely a shorter term trader. In crypto, short term has a very broad definition though. For me, short term means trading perhaps once a week, sometimes even less. Some people might consider that mid or long term. That's what I would consider short term. And I'm trading with 5 to 10x leverage. And my favorite trades are typically what I would call momentum trades. So when we break a key level, for example, rising above $42,000, I think that's a key level in my opinion. I would expect that Bitcoin might rise to the next key level after that, which I'm saying is 50K. So that's an $8,000 gap, which is nearly 20%. That's a range that I would trade. I would go long just above 42, close it just below 50. And, with 5, 10x leverage, that would easily be a nice clean profit. I would do the same thing going short below 30K. I used to trade a lot more aggressively than that. I used to, in this range that we're in right now, I would be ripping trades, but I just find that for the most part, these are ranges that are literally designed to just make you lose money. So I would rather not participate until people are, starting to panic or feel excited. When those emotions are starting to really go up in flames, that's when I think trading starts becoming a lot easier than in ranges like this.
Right, so you prefer the breakout and the breakdown trade instead of trying to pick the perfect top and the perfect bottom.
Absolutely, yeah, because and it's actually it's the difference between playing reversals or playing the trend, where you'll only get you'll only get 2 reversals per trend, but you'll get a lot of opportunities to play the actual trend. So that's why I prefer to take those trades instead.
All right. Very, very cool. And yeah, I kind of want to agree on that $42,000 area, but unfortunately, that depth cross is in the $42,000 area. So for me, I would need to see this above the depth cross, so closer to establishing 44,000, and it has to do it off of a bit of a pullback because getting back to 44,000 would feel like we've exhausted because we had to go so far to get there. But yeah, I generally recommend the breakout and the breakdown style of trading over trying to pick the perfect top and the perfect bottom.
Yep. Yeah. So that's actually something I'll touch on in my analysis. Bear with me while I get this. Let me know if you can see this okay.
Yep.
Cool. So we'll start with that then, with the idea of Bitcoin kind of going from 42,000 and above. I'm with you there. So I'm not actually putting too much weight on the death cross. And the reason for that is I feel like they fire quite late. I don't actually, um, I feel like we're still in a macro bullish cycle. So I can't see how this thing is going to continue trending lower for either a lot more price action lower, as in like if we drop by a big percent, or drop in terms of a big time frame. So we stay bearish for a long time. I don't see either of those things happening. And for that reason, I think that this death cross might just be something that's firing off quite late. That wouldn't be surprising to me. But yeah, absolutely, we need to clear 42 with a decent amount of headroom. It's not as, I mean, that's why trading is complicated. It's not as easy as just going long at 42,200. You know, you need to, it could be a fake out and then we kind of fall back down. We need to clear it with a little bit of headroom. But the good news with this range is this is a concept I talk about quite a lot, where you essentially get what I like to call kind of vacuums in the trend, where between two price levels, like these two yellow lines, there's just not much that happens. You know, when you rise above this yellow line, you're pretty much almost always going to hit the next one. Same for when you fall down, you're almost always going to hit the next one. In this case, we didn't quite hit it, but that's fine. This was the only fake out that I'm seeing here, where we did slip below and then we recovered back up. But again, the next time, it's just a straight shot. And that's why I feel like so I mean, this market, it was trending up with a lot of excitement before. There was, you know, a lot of euphoria, there was a lot of yeah, just general happiness, and I think a big part of it was, you know, just people weren't generally selling. It's not necessarily that a huge amount of people were buying, although that was part of it. It's, I think a big part of it was just people didn't want to sell their Bitcoin. They were too happy with their investments. And I think we can flip back to that pretty quickly. Right now, people are scared, but excitement can come back into Bitcoin very quickly. It's a very emotional market, and I think that's what can let us kind of rip all the way up to 50,000 if we clear this resistance right here. So I was actually expecting that this would take us up, but didn't want to trade it because, of course, it's resistance, and resistance is where you typically tend to get rejections. So once again, that's, it's just a very classic tenet of technical analysis, where, you know, if you know these things, that's going to solve like 80% of the puzzle. You know, the way I see it, it's, you know, you need to master the fundamentals, which is just resistance gets rejected. You know, I mean, that's where the price gets rejections. So that's where I'm looking at Bitcoin potentially spiking up. And there is a fair bit of resistance until we get there. But what I'm really liking is this pullback. I'm really liking how Bitcoin has, if we zoom in a little bit to the 1 hour time frame, has moved down with these measured moves down. I mean, we're getting little bounces. The bounces are coming off good levels. 38,000 is an area of support right here, and we're getting a nice bounce. I mean, I'm quite happy with that. Now we're forming another kind of bear flag and then dropping down. I'm seeing very healthy price action. I don't think that this is indicative of a really big catastrophic dump coming. And so what I'm looking for is hopefully a little bit of support right around here, and then potentially targeting 42 again. If we don't find support here, I will then look to the low $30,000 range instead. And I don't expect that 30,000 will hold if we test it one more time. We've already tested it 3 times. This would be number 4. And the more tests you get, typically the weaker a level gets, which is also why I'm very optimistic about breaking 42, because we've now tested it 1, 2, 3 times. Well, this isn't quite testing 42, nor was this, but it's close enough for me. I think it's just hitting the general range. And so I'm really looking at this area right here. I feel like this is the area I've been waiting for a while. Right now, we're not responding amazingly to it, but we did just initiate the dump. So it's way too early to say what might happen here. If there are, I haven't seen the classic indicators I like to use, but I'm not sure if there's much support in this range. So I like to use the Ichimoku cloud, which is a measure of support and resistance, but it actually predicts where it will be in the future, which I think is like a life hack. It's extremely cool. Very complicated indicator at first, but very cool afterwards. But not much else support beyond that from the indicators that I like to use. So it doesn't look great. And then, yeah, potentially slipping down here. And then I do think that, in line with ideas like the death cross, if we do fail 30,000, well, then that if we fail 30,000, then that means this was just one big bear flag. The bear flag will have lasted for, now it's already been 31 days. That's a pretty large bear flag in this market. And I don't even want to extrapolate what target that might mean that we're going to fall down to. That sounds, I can't get this line. Hang on. If you were to, it's abysmal. I don't even think this applies, but if we drop below 30K, I think we are in for a bit of a drop down towards 20,000, 25, whatever, before we continue up.
That's I agree with that. I think that if we go, I expected us to probably break the bottom of that triangle, statistically speaking. And if we had, I was looking for a target around that $28,000 range, and as low as 20. Though at the same time, I don't think this bearishness can last much longer in terms of time. So sometime this summer, I'm expecting us to go back up. So we'll see what happens, though I'm not bullish yet. I still think there is enough time for us to go into the 20s.
It would be great to reset the market that way if we can fall down to 20. That's obviously, it would be the textbook trading opportunity of a lifetime. I've been joking on my channel about how, like, I'm typically the guy that preaches a lot about, not doing anything stupid, but I've literally outright said publicly I would even consider selling my house to buy Bitcoin down here. Like, that's how bullish I'd be down at 20,000. And that's, it would be the full market reset. It would be so healthy. Maybe even dipping a little bit lower. We've seen it before. If we kind of zoom out to 2017, it's not unusual for Bitcoin. If I replay this is the first and last time that I ever panic sold Bitcoin. We entered we're going back to June 2017 now, when Bitcoin hit $3,000 for the first time. It got bad, and we started trading in, what looked like a bull flag. So, everyone was kind of happy with it. But then we gradually started slipping. And so now we have an element of time where, hang on, the bull market isn't continuing. The news are starting to really worry. Is the bull market finished? Are we done? This isn't a bull flag. We've broken down. And then bam, we drop even lower. And now we've nearly halved in value, right? So this was quite a scary bit of price action. And that was a final push. Dropping down to 20K could be that final push before a huge V-shaped correction upwards.
Yeah, if you turn on the MRI on that, it called it pretty damn well. I remember that. Though it was before I was actually using the MRI. You have it right there. Momentum reversal. Let me go back. Momentum reversal indicator. Yep, right there in the middle.
Okay, cool.
You got it. Yeah. It was right there. One candle before. If you zoom in on that, there was a green arrow on the day before the rebound.
Yeah, that's perfect. That will tell you that. Well, the thing is, the issue with these things is the MRI would fire off, and then you'd still drop by $400, and then even a little bit lower, and no one's going to have the balls to trade this. And that's.
I agree. I completely agree with you. That was not the easiest one to trade, but at least you are mentally prepared going into that day, and on the following day that, hey, let's see if we can get some momentum here, because it tells you traders might be exhausting around this time.
Yep. And it's perfect, because then we get, almost a doji candle here, which indicates a reversal. Momentum is shifting very clearly from the downside to the upside.
And there's nothing wrong entering this trade on the 18th or 19th. That's the beauty of, momentum trading.
Absolutely. I mean, it's never come back down to this level since then. So that's what I would consider to be max pain. The markets like to hit maximum pain for traders. So I think that would, I think it would make a lot of sense. The final thing on the short term, which I'm very, very excited about, is Bitcoin, and this is the same triangle that you were showing before, had a little bit of resistance with this diagonal sloping trend line. We hit it quite well, quite consistently. So I'm very happy with that. The hits are equally spaced out, and there's 4 of them. So it was good resistance. And I think that as a result, it could turn into good support. And that's actually one of the main reasons that I'm hoping that this area turns into support. If it does, and we start to get a nice bounce off this level, that's where I'll start to think that actually this is a pretty good, very small uptrend that we're in right here. Just focusing my eyes on this is a pretty good start to potentially start hitting levels like 42K again and punch that ceiling until we can break it.
Yeah, and looking at that trend line, I mean, it's almost now or never, right? Like either we bounce off of this trend line today or it breaks. And if it breaks, what kind of targets are you looking at? Even though you're a momentum trader, so that means if you do take on a trade, it will probably be a short trade around 34K maybe?
It's an idea I've considered because there's a good amount of support in this range, and then below this line, below 34,700, there's not much. But Bitcoin has been faking out a lot lately. At first you could have drawn a lot of different, triangles and things, and it's been faking out a lot with those. So I'm actually not comfortable trading in this whole $12,000 range. I've traded a little bit, made a few very small, and by very small I mean like 4%, nothing big at all profits, and it's been very choppy. Most people have lost a lot of money. So I'd actually prefer to completely wait for us to leave this range and trade a short perhaps below 30,000. So maybe enter at 29, trade it down to 25. I mean, just using 5x leverage on that kind of drop, I think it really pays off to wait a little bit. If I were to enter at 29,700 and your target that you said was 25,000, if I were to trade that down, that's a 15% drop on 5x leverage. That's what, 70% profit. I don't know, I can't do that math, but it's a pretty good profit. And I think it really pays because there is the opportunity of a fake out. Your profit would effectively double, which is still pretty cool if you entered it earlier. But you risk losing money in this range, and I don't see a reason to do that. I think if we're going to drop below this yellow line, we're probably dropping below 30 anyway. So I can wait for a profit that I consider to be safer, but smaller.
All right. So you do have a couple of indicators up there. How much weight do you put on indicators, and which indicators do you use besides price action?
So mainly my analysis is just this. It's super simple. It's just these horizontal levels, occasionally diagonal lines, because there's less room for interpretation with these things, and that's useful because you need to be as unbiased as possible before you enter a trade, and then very, very biased when you enter one. And that's why I tend to stay away from them. I do like to use the Ichimoku cloud, though. It rejected us quite nicely previously. We traded in or near it on the 4-hour time frame right here, and this is using 20, 60, 120, 30 settings. So this is not the normal setup for the Ichimoku cloud. And it did work well. So it worked well as resistance. I might expect it to work well as support. And this is what I like. I'm starting to get a confluence here. Ichimoku support lining up with a diagonal line. It also happens to line up with a Fibonacci level, which I'm not going to show because I don't think it's relevant. So that's cool. That's the only other indicator I use other than the EMA ribbon. So this is just a collection of EMAs down from 21 to 200. And it's basically a safer version of just using one moving average. It just means that you're more likely to be correct using something like this. And when the market is trending, which is not doing very well right now, it works really well. Very, very, very predictable hits on resistance whenever we kind of hit the ribbon or enter it. But right now, because we've been sideways, it's not very useful. Unfortunately, the daily time frame, it is useful, and it's offering a lot of resistance. This is This is one of the main things that worry me about this. This is essentially, a show for me of how the market dropped, what was it, like, nearly a month ago now, and it's only now that all of that momentum is starting to catch up to the trend. And according to this indicator, and that, yeah, is a sign that actually if this thing is going to continue to stay bearish, then this was obviously the perfect short opportunity right at the top, before it continues to trend down. And those are the only two indicators I use. I occasionally use the VPVR indicator, but it only makes my eyeballing, like, I can eyeball this stuff anyway. It just makes that a little bit easier. And unfortunately, it's a paid indicator on TradingView. You need a paid plan on TradingView to access it. So I don't talk about it too much, because I don't even think it's that good.
Gotcha. All right. Now, what about the bigger picture? We've been discussing the 4-hour chart, the 1-hour chart. What's your view of the big picture, weekly, daily?
So I don't analyze this too much. This is actually where I'll usually listen to someone like yourself to get your view, because my issue with longer term analysis is you don't know if you're correct until many months down the line, and by that point, a shorter term trader might have outperformed you. And that's been my perspective for a while, which is why I don't entertain it too much. But I have one big idea, which is Bitcoin crossed the $20,000 level in December of 2020, and we only had 4 months of trending upwards after that, and all of a sudden we've had a big drop. And I don't know about you, but I've never seen a bull market for Bitcoin this short in terms of time. It was a pretty good uptrend in terms of price action. The price tripled from the previous all-time high, and it actually did a 20x nearly from the low. So that's a very, very strong uptrend by price. But with time, this was incredibly short. So I struggle to imagine how this whole bull cycle is over. And because of that, I have to lean towards saying that actually this thing is not done. That's why I think we have a good chance of recovering upwards. Even if we drop down to 20, I think it would happen very soon, within the next couple of months, that we start hitting levels like 40K, 50K again. And the great thing when we do zoom out is that for the most part, Bitcoin didn't establish much resistance on this chart, and it didn't even establish much support on the way down. So there's only a few big areas that could be a problem, like the whole 50K range, 30K to 40K. These are actually the only two ranges that I see as being a problem for Bitcoin. Just these two gaps: 30K to 40K, 50K to 60K, roughly. Anything above 60K, I think will start flying. Anything above 40K, I think will start flying. So it just makes me very optimistic that as soon as this bullish sentiment returns, we don't have the price history to give us resistance in this range, and that's great. It's much better for a coin like Ethereum, where there's literally nothing on this chart. Like, I mean, it's just a straight shot up if we can break up, in my view.
Yeah, that Ethereum chart, go back to that. That's the Ethereum USD chart. That looks a lot more bearish to me than the US dollar versus Bitcoin chart, because we're way closer to, the Ethereum never broke out to the upside out of its descending triangle or symmetric triangle. If it's a symmetric triangle, we're breaking down now. So this, while Ethereum versus Bitcoin has been looking bullish to me, I haven't looked at Ethereum versus the dollar, and this chart does not look bullish to me at all. What are your views on it?
That's a good point. This is a recent development, so I didn't even see this. But that's bad. Yeah, I mean, it's a classic continuation. It's in a bearish trend. It consolidated inside of a symmetrical triangle. It did what was most likely to happen, which is break down. It could be a fake out, but it's pretty much too late to call this a fake out now. That looks like a real breakout. And I see the next kind of support here being down towards 2000. It's got a decent area of support over here, but in terms of time, Ethereum just didn't trade here too long. That's 60 days. That's okay. I think it's fragile. Look, if Bitcoin's going to fall, Ethereum will probably fall harder. And that's usually always how it's been. It's fragile. I'm more interested in a coin like Ethereum when the sun is shining, and right now it's not. So I'm not paying too much attention to it.
And So you mostly trade, you don't trade traditional assets, right? You stick to crypto and maybe like the top 10 crypto. Is that your is that the majority of your trades?
Yeah, so pretty much anything on Bybit, I'll look at trading. I like, coins like Cardano and things like that as well. But mainly, and by mainly I mean like 95% of my trades are just Bitcoin and Ethereum, mainly just Bitcoin. And the reason for that is a lot of the time there will be similar trade setups in Bitcoin compared to an altcoin. So I'll always choose Bitcoin. It's just safer. It's got more liquidity. It's way, way less subject to manipulation than any altcoin because of liquidity, and a bunch of other reasons. So I think it's safer to trade Bitcoin. And when you're playing with leverage anyway, it's which I'm doing. It's super accessible, I think, to hit the same kind of games that an altcoin trader will have with much less risk. And then traditional assets, yeah, I don't participate in them. I couldn't when I was younger because I was under 18. And since I turned 18, I just haven't really looked at it too much.
All right. And your general view on a lot of these projects, is it Ethereum and all these others, Cardano, whatever, are they all just trades to make more Bitcoin, or do you actually believe in some of these altcoin and DeFi projects?
Look, I mean, anything that provides competition to the mainstream banking industry is great. So from an ideological perspective, I support this stuff fully. Obviously, yeah, for the most part, my opinions are similar to yours. I trade everything, including Bitcoin, just to accumulate more Bitcoin because I think that Bitcoin will, break its all-time high at 65K, and every time it breaks it, it will usually double it and then some. So uh, making more Bitcoin is definitely the winner's route, in my opinion. And for that reason, I mean, I don't hold, I barely hold any altcoins at all. I think it's maybe 80-90% Bitcoin, which makes me a bear in this space, surprisingly, on altcoins, which is really funny. And yeah, I have a strong opinion on that. Yeah, I don't believe in any project really. Bitcoin's cool, but again, I don't want to get emotionally attached to this stuff. I've done that before and it hurt me in 2018. So I'm very detached from it. Very vocally always say that I'm just here to make more Bitcoin, and then the end result is I earn more dollars as well.
All right. So take a few more minutes. If you have any other charts or anything else you want to say on charting, I'll then steal the screen share back. I'll quickly glance at the traditional markets, gold, S&P, maybe one more peek at Bitcoin. And then I want to spend a few minutes talking about the difficult life of being a public personality that is also a trader, and private groups, how do traders make money. It's a really interesting dynamic that many people are very unhappy when you do that. And I can see how, I mean, look, you've been called a scammer many times, I've been called a scammer many times, and I just want to talk about that a little bit.
Absolutely, yeah. So just to round off the analysis then, I mean, you'll be much better at this, but dollar has started to move up a little bit. I don't know what conclusions I can draw off this, but it does explain a little bit of the price action with Bitcoin dropping, and same for gold. Gold's very interesting. I'll just give this straight to you because I want to hear what you have to say about this.
Sure. Let me take a peek at this. I got to Dubai in the background, and I know that's where you're mostly based, and I'm going back there as well. And I'm bringing my events there as well. Oh, and speaking of my events, just a heads up, guys, I will be doing the next financial summit in Dubai. Sammy is based in Dubai. I have he's not officially on the website yet, but I have a feeling you're interested in attending this. Are you?
Oh yeah, absolutely. Russellheim is a great place to do it. Great drives around there.
All right. So let me get back to the charts. All right, quick peek at Bitcoin. I know some people joined late. We have 1,000 live viewers. I know you get similar amount of views that I do on your YouTube channel as well. So you've done a pretty good following. You're getting 20,000+ views per episode. You're actually getting better numbers than me. So that's awesome.
It's all in the clickbait, man. You have to do it.
Oh yeah, okay. We're gonna talk about clickbait a little bit.
Yeah.
A little bit about that. I mean, I don't have a problem with it, to be honest with you. I don't do it, but I don't really have a problem with it. I understand. So, okay, daily chart. It would have been nice for yesterday's candle to be right in the vicinity of the death cross, but you know the market always has other plans. We turned a little bit early. We turned one candle, well, technically two candles before the MRI top. And right now we're pulling back down. I do not yet see the big breakdown at $33,000, taking us to the mid $20,000, but it's possible. I still think that we can hold up. We can bounce off the top of this triangle in the $35,000 range and still rally. And everything is going to be determined once we actually start hitting these moving averages, and then we'll know how big of a rejection we get. Quick peek at GBTC. Obviously, it is going down, and the premium is still negative. I need to talk about the premium some more because I know I might have a few new people following. Bitcoin dominance hit an MRI top. I am expecting this to, pull back a little bit down, but then even if Bitcoin crashes, the shitcoins are going to crash more, and very likely Bitcoin dominance will start to trend back towards 50%. With the dollar rising, gold did take a bit of a hit. I am not as bullish on gold as I was during this consolidation near the top. On a weekly scale, we are pretty much sitting at where I see support. So if we go down any further, but I still think we bottomed for the year. I still think gold will recover from this, even though that's a bad candle. We topped at a very unlikely area. I did expect us to pull back after the MRI top in this weekly gold, but having this candle trading above prior two candles made me bullish once again. And had I entered the bullish trade, obviously my stop loss would have been hit and I would not still be long in that market. Oil, I think oil has gone through its 1 to 4 candle correction off the MRI top, and oil should now see new all-time highs in the near future. The S&P 500, while I was certainly bullish at this breakout, I did respect the MRI top, and this MRI top is still in its 1 to 4 day correction. So hopefully this moving average can hold up the price and we get back there. DXY, we already talked about it. I really don't see the dollar continuing to strengthen for this long. And we'll see what happens with that. But I am expecting this top to hold as of now. And the more likely path is still the devaluation of the dollar versus other foreign currencies. Though the US did open up, even New York and California have opened up, and Europe still wants to keep people in their basements, basically depriving them of sunlight and any health whatsoever. So is Canada and Australia and all the others. So we'll see. Maybe the dollar will strengthen. Okay. Let's we still have a few more minutes. I like keeping these shows to about an hour, so we got about 13 minutes left. I want to talk about the challenges of popular personalities. Again, guys, this is Sammy. Let's quickly talk about the clickbaity titles, or thumbnails. So I know why people do it. You do it to get followers, and your thumbnail doesn't represent the content of the video. I know Carl Moon and MM Crypto and many others, get a lot of slack for that, but they're crushing my views, guys. So if I start doing clickbaity titles, more people will watch my streams. So I feel more people would get good information, but I just haven't gotten myself to do it yet. I personally don't have a huge problem with it, but what are your views on it for the titles? Because you did mention it.
Yeah. I mean, you mentioned a point which I actually would have said as well, which is through this, more people will find the content and they will watch good content. I believe I'm putting out good content. So, anyone's welcome to disagree with me. But I think it's good content, and it's great if more people can watch it. The other thing, and this has always been true. I hope that it's not going to be a surprise for viewers. This is what the algorithm rewards. This is what people click on. And it's not just like this with YouTube. It's become like this with newspapers and every other form of media where you get to choose what you're watching. So not television, but other things like that. So you either play the game or you don't. And that's what this is. So obviously, I do try to make, I think I do make the titles and thumbnails representative of what's in the video. And when you watch them, I mean, you know, the titles, thumbnails at face value, they'll be very shallow. But then, I mean, look at the timestamps of each video. I mean, it's 20 minutes, 25 minutes, 1 hour each video. There's a lot of very thorough content in there, and I think that's quite important. You know, it's going to get the clicks and it's going to educate as well.
Right. So, like you said, algorithms rewarded, and here's the dilemma, guys. There's other dilemmas here. So, the way I run my YouTube channel right now, my YouTube channel has a huge focus on trading. Most of my videos are about trading. Most of my views, most of the people come here to watch trading. To be honest, that's not what I want to be doing. I want to be doing more news shows. I want to be doing more educational shows about Bitcoin, not about trading Bitcoin. But that doesn't pay you any money at all. And at the moment, here's my dilemma. So because I don't have, I mean, I started a little subscription private Q&A, which I may continue and I may not continue. And there is another project that I'm working on MRI signals, which are not going to be buy and sell signals, just MRI signals. And then you decide if you want to buy and sell it. But right now, the only profit that I actually make is, I'm going to go back to screen share for a second, is from my website, products and services, either these on-demand videos, the same workshops that Sammy attended, or the MRI itself. And this month, I've had virtually no sales. I think I've sold 1, maybe 2 accesses to the MRI this month, and maybe 1 or 2 of these on-demand videos. And I don't want to sound like an asshole, but if these things are not actually profitable, I'm really down to 2 choices. Either I'm not going to be doing these trading videos and I will migrate my channel to be more Bitcoin education, because if I don't make money from this, then like there isn't much of a point to do it. I'm going to do something I like. Like if I'm not going to make money from trading, from teaching trading, I'm going to teach Bitcoin that I'm not going to make money from. But I think that would be, you know, more satisfying to the rest of my life and probably benefit a lot more people in the long term, not in the short term, because I'm going to lose half my viewers. The other thing I can do is actually go back to trading. But if I go back to trading, that takes a lot of concentration, that takes a lot of work, that takes away my travel, and that will take away Bitcoin evangelism. But people want it both ways. People want you to make all of your money from trading, but then provide them all that knowledge and have them follow your amazing trading so they can also make money for no payment to you. And that is something that people have to understand is not normal, right? That's not normal. If I start my own fund, family office or hedge fund, and I'm making all of my money from trading and it's profitable, why on earth would I share that? And if I'm sharing it, it's going to come at such a huge price that very few people are actually going to get to participate. Because if everyone is following your profitable trades, they're just not going to be profitable anymore. So I'm not really sure what people's expectations are from YouTubers. Now, I've chosen the route to only charge for trading education. And as long as that money is paying for my lifestyle, I'll continue doing that. Because if that's not covering my lifestyle and I have to dish out of my pocket, I'm just going to do something that I feel more satisfied with that would help the world more. Your views on this whole thing, Sam?
Yeah, I think a big part of it is there's free value here, and that's definitely taken for granted. That's not a problem. It's not something I'm here to complain about, but it's something to keep in mind. And I'm with you on the other stuff. I mean, the market will give what's profitable, and if it's not profitable, it will die out. And that's exactly what you just described. It's not surprising, and there's not much more I can say than what you've already said. If the market is not rewarding it, i.e., buying it, then the whole strategy will change, and that shouldn't be a surprise to people.
Yeah, like right now, I'm using my channel because the majority of people want to know where the price of Bitcoin is, but I'm using that audience to try and educate about Bitcoin. And that's the way it's been happening for a while. As you guys know, the law shows have kind of stopped. The news shows are not daily like they used to be. But I just feel that stuff is more important. And I don't want to go the route of sponsors. I really don't. I'm also not a good salesman. Making these relationships, making these deals with sponsors, choosing the wrong sponsor that turns out to be a scammer. I mean, that's your reputation. I'm a little more open on the conferences. This is another reason why I started the conferences. We have the 2 educational conferences, Unconfiscatable and Understanding Bitcoin, which don't make any money. Maybe one day they will with sponsors, but right now they don't make money. And hopefully the Financial Summit will make some money one day, but Dubai being so expensive, that one probably won't. But that's the route for now, guys. But we'll see what happens with this channel in the years to come. And I don't know which way I'm going to go yet, but so far, staying the course. All right, Sammy, anything else you want to add before we head off?
We were going to touch on some of the criticism and things like that. Do you want to do
that?
Right,
So you do have a private VIP group where people have more access to you. It is similar to my private Q&A, though in my private Q&A, I still, I'm not actively trading right now, guys, because it's just not something that I feel I want to do, because trading isn't going anywhere. Trading has not changed since the day I learned it 20 years ago, and it will not change in 20 years from now when I'm finally ready to retire. So it's not going anywhere. It hasn't changed. So Sammy, you've gotten some criticism about your VIP group. Tell us, tell us a little bit about it.
Yeah, so I think one of the main ones is a lot of people, when they join a group like mine or another, is that they're looking for signals and financial advice. They're looking for something that they can copy paste and trade with. And beyond the boring legal disclaimers that are there and 100% apply to what I'm giving out, there's not much more I can do to repel people like that. So in the past, I wasn't actually great at this because I was an idiot. I was young. I was like 16, 17, whatever. But as I matured and grew, learned more about everything, I started turning those things away. And the way I advertise this on my YouTube channel is, and you've got to listen to this from the perspective of somebody who will watch content like mine, might not know as much as me, and they will be in awe, thinking that this analysis is great, it's level-headed, any other compliment you can throw at it, and they will want more. And the more that I'm putting forward is not trading signals that you copy, but is instead getting an insight into the process behind trades, because 50% of it is the analysis, and the analysis needs to be great, and I think it is on the YouTube channel. But the other 50% is how you trade that, and there's going to be a lot of different things with that other 50% that go into it, and that's what I've put behind a paywall. It's not buy this with this leverage, short here, whatever. That's not what the paywall is. It's the whole process behind what goes into that. So a good example, if I can share screen, is, one second, let me find this. Can you see this?
Yep.
Okay, so a good example is what happened just yesterday or 2 days ago. I mentioned to my VIP members that this right here, when the market was kind of like around here, I mentioned that the $38,000 level, which the market was very close to or just bouncing off from, could be a good long for Bitcoin. But I also said that I'm not going to trade this because there was a lot of fake outs, and we might not actually trend up very high. That's a thinking process. That's something that otherwise looks like a pretty good trade. Bitcoin got a pretty nice rejection from 40,000, 41,000. It wasn't a big rejection. It wasn't super quick. You know, we only dropped from 40.5 down to 38.5 in the space of a day. I don't think that's too bad. So I said, yeah, this could be a good long. And a lot of people would have thought that. But then I'm also outlining why I'm not doing it. And I think that's super valuable. You know, a lot of people who would have paid attention to things like that, I mean, they'll see that, you know, temporarily this kind of trade would have been a profit. And depending on how much leverage you use, it would have been a nice profit from 38 up to the high. You know, using 5 times leverage, it's a 15% gain. I mean, whatever, it's a scalp trade, right? That's not too bad to hit 15%, 30% on 10x leverage. And like I said, I use those two numbers. But I outlined that actually, I mean, there's a lot of fake outs. There was a small fake out here. It just ended up kind of breaking down. These are things where if people are a little bit more conscious of learning these things when they join a group like mine, it'll work out pretty well. Those are the people who tend to be successful. You know, those who will take those things and you know, one of the main takeaways that the successful students will have from my products is that they trade less. And I think you can probably comment on that, how most people trade too much. Most people actually fall into the trap of thinking that the more they trade, the more they'll make. And while that might sound that way on paper, it's not true in practice, because every time you trade, your risk goes from 0 to any other arbitrary number above 0. So you're open to losing money. And so that's why I actually I try to limit that as much as possible. And it's one thing to hear that. It's one thing to read it in a book. It's another thing for me to tell you, look, I considered this in real time. I didn't know we would end up breaking down. Here's why I'm not trading it anyway. And so you learn those same lessons in real time. That's what I'm putting forward. Not signals, not copy paste stuff. That's why now with almost every package we sell, I've got a course, you know, A to Z on Bitcoin, similar to yours, and it's coming for free with every membership now, because people need that. Since we did that, people have generally had better results, and that's kind of what we're putting forward.
All right.
I'm open to any ridicule or whatever if you want.
Yeah, no, you're getting it. But here's the thing, guys. I don't know if you want to drop screen share at this point. And look, I don't have a problem with people creating paid trading groups. I subscribed to a few of them when I was younger and started out trading, and I lost money. And to me, it's a challenge. And it's not even because the people in that group lost money, it's just that everyone is different. Trying to follow someone else is very, very challenging. And this is why I have taken a view from day one of this channel that I'm going to teach people to do it themselves. And if you're not able to do it yourself, you're welcome to join private groups and follow other people's trades, but you have to be prepared that they may not work for you. But I don't find that in itself to be a scammy practice. I also don't have a problem with people promoting derivative exchanges or leveraged exchanges. I believe people are adults. I mean, if you're promoting derivatives exchanges to kids, probably a bad idea. Just like gambling. Like, I wouldn't want to promote a casino to kids, but you're an adult. You know, if you want to go play roulette, go play roulette. You have to advise people of the risks a little bit, but I don't have a problem with that. The only thing I have a problem with is when people are taking other people's money and trading it without the legal structure to do so, because that's illegal, or just stealing people's money in general. So I don't have a problem with those practices where, I mean, people are, no one's forcing you. You don't have to join those groups. And if you don't like it, leave.
Absolutely, yeah. It's it depends on with which perspective you're joining something like that with, and obviously how the person advertises it, so that you don't get misled. And couldn't say anything beyond that.
Right. That's kind of my view on that. And I think I had like one final one, just one final thought that I really like kind of slipped my mind on these kinds of private VIP groups. Oh man. I was gonna say one more thing. Shoot. Usually that doesn't happen to me. But I really had a good thought and then it just slipped out. All right. Anything else you want to say, Sammy, while I try and remember?
No, I think that's it for me. I've covered all of my analysis, said my piece on the whole VIP stuff as well. I'm with you there on the self-education thing as well, by the way. You know, copying somebody is not easy, mainly because you won't be able to commit to it when things get bad, and they will get bad. That's why, yeah, going down the education route, being able to do it on your own is great. Everything has been built from the perspective of not giving you the fish, not even giving you the fishing pole, but giving you the instruction booklet to make your own fishing pole. That's the approach that I've taken to make people self-sufficient. And again, with the people who don't come in just looking for signals, we're very clear about how we don't do that. It's only one aspect of what we offer, showing my trades. It's typically the aspect that a lot of people are interested in, but it's only one. If you read the benefits list, there's a lot more, and I think that's important. You know, if you're joining with the mindset of learning from somebody who you admire, that's quite useful. So I remember with your workshop back in Amsterdam, I'll be honest with you, I actually did. You did a live trading session once on the 1 minute time frame with the old indicator. I actually did copy that trade because I was mind blown by how successful it was the first time you did it. But what I was more interested in, apart from that, was because that was just me being cheeky. What I was more interested in is looking at how your whole thought process led you to, at that time, I still remember it was on the 1 minute time frame, you went short. What led you to going short? Not necessarily the exact trade, go short here with this leverage, whatever. No, just what led you to do it. And when you deconstruct a good trader's behavior in that way, or even a bad trader, but obviously better if it's a good trader, you'll learn a lot. That's why trading books like Market Wizards, I think, are very helpful, because it just straight up interviews good traders, and you'll get inside their head and you'll start thinking like them. And that's where I think a lot of the power is.
Yeah, no, thanks for that. And yeah, thanks. Thanks for hyping up those 1 minute trades that I do sometimes, which is not something I have an expertise in. I remember what I was going to say, and alongside that, the difference with Van Zandt. So look, if you are a bad trader and you have a signals group and people are losing money because of your bad trades, that's not a scam, guys. That's a lesson. Maybe you chose a bad trader to follow, or maybe you shouldn't be following any trader and learn to do it yourself. So I don't see that as scammy. The problem with Van Zandt was he actually took other people's Bitcoin. In one case, 10 Bitcoin from a person, traded it for them, lost it, and then lied about it. And he didn't have a regulatory structure to trade other people's money. That was the problem with Van Zandt. And yes, that is a scam, which is why there was a whole video about, Van Zandt on this channel. And but you don't know that's happening because I'm not, I don't have an investigative PI checking everyone. The final thing I'm going to say is when people ask me, why do I collaborate with traders like yourself, even like Van Zandt back in the day, that one was my fault. I remember Van Zandt from 2014, 15, when he was one of the few TA guys out there. Carl Moon, Da Vinci, even Crypto occasionally, because I don't see him as often. Why do I collaborate with you guys sometimes? And the answer is, you guys have more viewers than me. I know I have some viewers, but you guys have more viewers than me. And I am more than happy for your viewers to know that I exist. Same thing with Carl, same thing with MM. And maybe there are some of my viewers that will realize that Carl exists and MM exists. But I have confidence in my videos. I have confidence in myself that if I introduce myself to their audience, I can capture some of their audience. And they have confidence in themselves, like you, Sammy, that if you introduce yourself to my audience, you will capture some of that audience. And it's about confidence in being a trader, but you guys are all adults. You can decide for yourself, what trades to take and whether you should or shouldn't enter certain groups. Like that's that due diligence is on you, and you have to be smart.
Could have said it better, man.
We're gonna go ahead and leave it here. Sammy, thanks again for joining. Sammy's Twitter and Sammy's YouTube are in the video description. Go ahead and check that out. You guys got our views on the analysis. I know I promised yesterday that I would do a private Q&A today, but I totally forgot at that time that Sammy was joining me on this channel. So I promise I will do a nice, long, extended private Q&A session tomorrow for everyone, because I haven't done any this week. So we'll do a nice long one tomorrow. I might even finally open it up to the general public today, so a few people can register for it, so that we can have a nice long session with more people in that private Q&A. All right, guys, thank you all so much for watching, and see you all on the next one.